Alrighty, folks, so we have a lot to break down in this video, a lot of companies to cover, a lot of earnings estimates to go over, and of course, a lot of charts to break down. And you may be asking yourself, Stas, wait a second, isn't the stock market closed tomorrow? And yes, the stock market is closed tomorrow, and I don't give a crap. I'm still going to be making this video. So let's just dive into it. If you guys find value, hit that like button, make sure to subscribe, and don't forget to get up to 16 stocks for MooMoo, each up to $2,000. All the details are linked down below. You might as well get 12 more stocks from Webull with any amount deposited. We'll talk more about that later. And with that being said, guys, cheers, stay hydrated out there, very important. And now let's dive right into the video. So stock number one that I want to break down here, the first company is none other than CrowdStrike, ticker symbol CRWD, and I believe they're reporting earnings on Wednesday, or is it Tuesday? Let me take a look here. It might be on Wednesday, the 31st. Let me double check if it wants to work. Yep, 31st on Wednesday after the bells when CrowdStrike is set to report. And you guys can see this stock has done very well over the past couple of weeks. I mean, very, very well. This stock was at $115 back in the beginning of May, and now it's pushing $155 as we're slowly wrapping up May. So this thing is up around $40 in the over the course of the past couple of weeks, which equates to 33% in the green. That is insane. And you guys can see we're trading at a multi-month high. We're seeing this ascending triangle that I called out play out beautifully, and mind you, it is a little bit overbought, I'm not gonna lie. So earnings have to come out very strong, guidance has to be very strong for this to go up even more, in my opinion. Maybe a lot of the green is already priced in, but at this point it's doing very well. Again, multi-month high, golden cross, above the moving averages. It's looking fantastic. So Wednesday after the bell, they're looking to do EPS of 51 cents. And mind you guys, these are all estimates. We don't know exactly what the numbers are actually going to come in at, but EPS estimate is at what? 51 cents? Yeah, 51 cents on revenue of $677 million, which would be up almost 40%. You heard that right, 40% year over year. So I'm loving it, guys. Pretty good growth for CrowdStrike, and this stock is still far off the all-time highs. I believe all-time highs were 300 plus, believe it or not. Or no, right around 300. We hit that 298 mark back in the end of 2021. So we're still well away from that all-time high, and who knows when we'll get back to it, if we ever do, which probably we will at some point. I don't know. I mean, we don't know exactly what's going to happen, but overall, if these numbers come in strong and maybe we do get a big pop, these are some levels that we could be going to. Maybe 168 in the short term. That was the high from the end of October heading into November. If that were to break, maybe we start going 180 to 185. That was the high from the beginning of October. Maybe we start going 195, 200, which was the high from the middle of September. You guys can see these levels are clearly, big resistances coming up. So maybe we do get, some choppiness around earnings. I don't know. Maybe it pulls back a little bit, which honestly would be healthy. And if we were to come down to, let's say, 135, 140, which was the high from the end of March heading into April, now that's clearly a support. Maybe we held that for a little bit and then we started to make a move towards 160, 165. That would make sense to me. Then if that were to break again, maybe we could start going 180, maybe even higher. So CrowdStrike's on Wednesday, guys. I'm pumped about that one after the bell, and we'll see how it goes. The next one is good old Salesforce, guys, ticker symbol CRM. Let me pull it up and show you guys how this has been doing. This is also pretty overbought, just like CrowdStrike. Maybe not as overbought as CrowdStrike, but still, it's at a fresh high here on the 4-hour chart, guys. That's all you need to know. We're trading at a multi-month high, and this stock has done very well over the course of this year. We started off the year at around, I think, 130, 125. Now we're over $215 per share. Percentage-wise, we're up around 67% throughout the course of this year. So earnings are coming up on CRM on, I believe, Wednesday, same day as CrowdStrike after the bell. And mind you, we actually called out this ascending triangle, not to toot my own horn, a couple weeks ago. That clearly played out. You guys can see we broke out of $200. Boom. Now we made a move up to $215. So we are now approaching, let me see here, the highs from the end of March, like I talked about in that video a couple weeks ago. And you guys can see my analysis from that video is still here. Do you guys see the arrows right here? We call called this out a while ago. So look, maybe we test 220, 225 in the very short term. Now, if that were to break, we could be going towards the mid 200s. There's really no resistance between 220 to about 240, 250. So I think that is where it could be going. If earnings maybe come in very hot, maybe they're better than expected, maybe guidance is very strong, that could cause CRM maybe, just maybe, to make another big move. But, it is a little bit overbought. I mean, it's at a point now where, and you guys know me, I'm not a big earnings trader. I don't like buying calls or puts or buying shares before earnings and hoping and praying it goes up or down, right? I don't do that anymore. So for that reason, I'm going to be patient. I'm going to sit on my hands, and I'm going to see what happens as earnings actually come out. And again, Monday's Memorial Day, guys. The markets are closed, so keep that in mind. By the way, happy Memorial Day weekend, Memorial Day to everybody out there watching. You guys are awesome. I appreciate you all as always, and I hope you're having a fantastic weekend and have a great Monday with your friends, family, and you just have a great day. It's a great day. I love Memorial Day, and funny enough, my birthday is actually on the 30th, which is going to be awesome. That's on Tuesday. So yeah, guys, that's CRM. They're looking to do EPS of $1.50 on revenue of $7.62 billion, up around 2.8% year over year. So don't expect anything crazy for CRM when it comes to earnings, or rather revenue, pretty much flat year over year. But that's pretty good considering some other companies out there are seeing declining revenues. Some are declining more than others. So CRM is going to be growing around 3% year over year. Not bad. CHWY on the flip side, which is stock number 3, they're looking to do revenue of $2.73 billion, up around 12% year over year. Not bad. A lot better than the 3% from CRM, but EPS is looking to come in at negative 4 cents for CHWY, so they are going to be losing money, which it looks like last quarter they made money. They made 16 cents, or they earned, or EPS was 16 cents. And by the looks of it, it seems like CHWY is very inconsistent. Let me see here on the yearly chart. They make money some quarters, they lose money some quarters, they make money some quarters. So it looks like here back in August they reported 5 cents EPS. Then in December, they reported negative 7 cents. Then in March, they did 16 cents. So profit, no profit, profit. Now they're looking to do, again, negative 4 cents. So that's another loss. So they're yo-yoing here, guys. Up, down, profit, no profit. And the stock is down a lot, pretty much almost cut in half. Well, not really, but pretty dang close, guys. From $53, now it's at $30, and that is down, 43%. And we do have a descending triangle here on CHWY on the 4-hour time frame, so not the most attractive pattern here for the bulls, at least. And we have earnings coming up, I believe, on Tuesday. Nope, they're on Wednesday as well, guys. So all 3 of these so far are on Wednesday: CrowdStrike, CRM, and CHWY. So be careful if this falls under $30, guys. And mind you, $30 is pretty much the low here on the 4-hour chart. Things could get a lot worse quickly, depending on how the numbers actually come out. Guidance, EPS, revenue, all that good stuff. So we also have Nordstrom this week. JWN's the ticker, and this is one that could be on the verge, keyword is could, of breaking out. We have the left shoulder here, the head, the right shoulder. We are slightly above both moving averages, and if this inverse head and shoulders plays out, we could start going towards maybe $17, $17.50, which was the high roughly from the middle of April. If that were to break, things could get even hotter. So I'm going to set my alert at $17.75, and we'll see where it goes from there. Markets out or above, and it looks like they're on Wednesday as well. Yep, they're on Wednesday as well after the bell. So EPS is looking to come in at negative 8 cents for JWN on revenue of $3.12 billion, down 12.7% year over year. So Nordstrom's revenue, guys, is going to be declining almost 13% year over year. Not the best sign, but who knows? Maybe that's already priced in. The stock's beaten down. I mean, you guys can see it was at $22 back in November. It shot to $29, almost $30 in February. Now we're at $16, so we are down about 47% from that recent high. Maybe a lot of the negative news, bad earnings are priced in, and maybe we're due for a rally. I don't know. Maybe guidance comes in stronger than expected. Time will tell. So JWN's on the list for this week, and so is Dollar General, guys. Ticker symbol DG. Let me pull it up and show you guys. Dollar General is down a lot, mind you, like a lot of these stocks are. This is down 22% from the recent high. So right off the bat, this is in a bear market like a lot of stocks are. And they're reporting on, let me see here, what they're reporting on. They're on probably Thursday, right? Or maybe Wednesday. Yeah, they're on Thursday in the morning, and mind you, that's the first day of June. They're looking to do EPS of $2.39 on revenue of $9.46 billion. That would be up around 8% year over year. Not bad. Up 8% revenue for Dollar General. You cannot complain. And this is one that just took the lows out from, when was that? The end of March. We just took those lows out literally last week on Thursday. We hit 198. The low from the end of March was right around 200. So this could be setting up, keyword is could, nobody knows exactly what's going to happen, but maybe we could be setting up for a relief rally if earnings come in stronger than expected, which who knows what's going to happen, but it's already very beaten down. I mean, it's going to take awful earnings, in my opinion, for this thing to collapse after earnings, which could happen. Nobody knows. But yeah, I'm just looking at it to see what it does, or, what direction it ends up picking, and this is why I don't trade on earnings, because we really don't know what's going to happen. And guys, with that style of trading, or with that rule in place, you are going to miss a lot of moves. That's the reality of the matter. For all we know, Dollar General, they could report and their stock could go up 20%, something like Nvidia, right, which went up 30% on the day pretty much they reported earnings, or 25-30%, whatever it was, right? You're going to miss that move. If you don't trade on earnings, you're going to miss that move. But trust me, it's very worth it, very much worth it, in my opinion, because you also miss out on losing a ton of money when the stock goes in the other direction. Because for all we know, Dollar General, they could report, and you think they might go up. You think they might blow earnings out of the park and the stock's going to go up. But no, it might go down 10%, and you might be in the hole 10%, 15% like that, just after earnings, just after the bell, if you decided to buy and hold through earnings. So Dollar General is on the 1st of June on, or not Wednesday, that's Thursday. I'm losing track of the days here, guys. And we also have Broadcom, ticker symbol AVGL. Let me see what day they're on. And holy crap, I just realized Broadcom stock is up a lot. They're on the 1st of June. They're on Thursday after the bell. And to be honest, guys, whenever I see a setup like this, it's up, oh wow, it went up 11.5% on Friday, up $80 per share in one freaking day. Whenever I see a setup like this, guys, alarm bells are going off in my head. I'm like, in my head, I'm thinking, I'm staying away from this 100%, especially heading into earnings, which who knows what the earnings are going to be like, because we're already so overbought. Think about it, guys. Just 2 weeks ago, a little over 2 weeks ago, this stock was in the low 600s. Now it's up to the low 800s. So it's up $200 a share in 2 weeks, a little over 2 weeks, 31%. This is priced to perfection. So be very careful. I'm not telling you guys what to do. All I'm saying is you got to be very careful. So AVGO, they're looking to do EPS of a little bit over $10 per share, $10.08 to be exact, on revenue of $8.7 billion, up 7.3% year over year. And to be honest, I would be shocked if this thing went up even more after earnings. I don't know what's going to happen, obviously, but this is priced to perfection. And especially before earnings, guys, when stocks are priced to perfection, we have to be very mindful of that and very cautious. And honestly, buying puts here seems attractive. I'm not going to do it, but I don't know if you guys do that's on you. But just based on the chart, the charts right now, puts right here on this stock might work. I don't know. They might work. We'll see, of course, how Monday's closed again. Tuesday, Wednesday. We'll see how Tuesday, Wednesday look. And, if this thing starts pulling back a little bit, we'll see how it goes from there. But they're on Thursday on the 1st of June. And we also have Five Below, guys. Ticker symbol FIVE, which, let's be honest, nothing in that store is less than $5. I mean, okay, fine. Maybe some things are less than $5, like the candy, maybe, the sodas, the energy drinks, maybe some snacks here and there, some little toys as well. But a lot of the stuff, or some of the stuff, is well over $5, guys. So it's not really Five Below anymore. Just like the Dollar Tree is not really say the Dollar Tree or the Dollar Store, the Dollar General anymore. It's like the $2 tree or the $5 tree, right? It seems like Five Below or the Dollar Tree or Dollar General has now turned into Five Below, if you guys know what I mean, right? With this inflation, and it makes sense. I mean, these companies can't make money if they literally price everything at $1. It's just not going to work. It doesn't work out that way. But either way, Five Below reports earnings this week. I believe they're on Thursday, after the bell. And this stock is actually down about 20% heading into the earnings. We went from 220, now we're at 177. We're at a multi-month low. We're under the moving averages. We have a death cross, all that jazz, right? And they're looking to do EPS of 62 cents on revenue of $728 million, up almost 14% year over year. Not bad, guys, not bad. So let's see if we could get some sort of relief rally on Five Below, whether it's before earnings, after earnings, maybe next week, I don't know, or the week after even. So keep your eyes on Five Below here, guys, as it is very beaten down. I know I'm definitely watching it. And before we talk about the last 3 stocks, guys, if you guys have not gotten your free 16 stocks yet from MooMoo, not 15 anymore, now it's 16 stocks, each up to $2,000. Use that link down below, or simply go to StasSurfest.com/MooMoo. Once you guys open up an account, you get 1 free share of stock right off the bat, and fund your account with at least $100. You get 5 more stocks, totaling 6 stocks, and fund your account with at least $1,000, guys. You get 10 more stocks, totaling 16 free stocks. It's literally free money, guys, no strings attached, and of course, it helps out the channel. So if you want some free money and you want to help out the channel, use that MooMoo link down below, or again, go to StasSurfest.com/MooMoo. It is greatly appreciated, guys. And with that being said, let's talk about the last 3 stocks for this video, which are companies that you guys probably know. Well, at least I hope you know these. So the third to last one is Lululemon, guys, which is down a good chunk here in just the past 3 weeks roughly. It was at $390 to start off the month. Actually, that was on the 8th of this month. So we were, almost halfway through the month, and the stock was pushing $390, and now it's at $340. So it's down around $50, around 12% in the past 3-ish weeks. And we have earnings coming up, I believe, they're on Wednesday, I think. No, they're on Thursday after the bell on the 1st of June, and they're very beaten down, guys. No doubt about it. This stock is very beaten down, and in my opinion, it's due for a relief rally. Will we get it? I don't know, but they're looking to do EPS of $1.97 on revenue of $1.92 billion, up 19% year over year. So they're going to be growing revenues pretty nicely year over year, which is awesome. And when we look at the stock chart, I mean, it's very beaten down. Like I said, it's pretty much, I don't think it's had, maybe it's had one green day, but it seems like it hasn't had a green day in about 2-3 weeks. So in my eyes, I can see a rally coming on Lululemon, especially how we've seen the stock perform during recent earnings reports. Well, the most recent earnings report, which this stock went from $315 to $380 on that report, that was a move of 20%. So maybe history repeats itself. I don't know. But then again, looking at the report before the last report, the stock actually collapsed. It went from $375 down to about $320. That was a drop of 15%. So just because last report we went up a lot doesn't mean it's going to happen again, but it's still something worth looking at, and we'll see if we do get some buying pressure. Let me see here some key support levels coming up. Pretty much, right where we are now. This is a big level of support, right around 335, 340. That was resistance in the beginning of November, all throughout December, heading into the new year, up until pretty much the end of March. 335, 340 was resistance, and of course we broke out of it, making it support. So maybe we do trade in this little range right here between 335, 340, maybe up to about 355-ish, maybe 360. So keep your eyes on Lululemon, guys. Ticker symbol LULU. And we also have Chargepoint this week, guys. Ticker symbol CHPT, which maybe some of you all forgot about this company. I don't know. But they've been destroyed. Let's just say that. The stock price, at least. The company's still growing revenues pretty nicely, but the stock price is not doing well at all. This was at $20 back in September, and now we're under $10, guys. Oof, we're down about 60% from that recent high, and don't even talk about the all-time high. I mean, the all-time high on this thing was $50. Now we're under $10. You do the math, guys. We're down 85% pretty much from all-time highs. So this is it's going to be one worth looking at. I mean, they're growing revenues a ton. They're looking to do revenue of $128 million, up 56% year over year on EPS of negative 17 cents, which would be better than the last earnings report and the one before that. You guys can see last report, they lost 23 cents. The one before that, they lost around 25 cents. So losses are narrowing, revenue still growing, but the stock is still getting destroyed, which something's going to have to happen, obviously, to cause this stock to break out. We need some crazy catalyst, which clearly we have not gotten, in a while. So they're reporting on, let me see, probably on, Thursday the 1st in the afternoon. Okay, so they're after the bell on Thursday. And the last stock, last but not least, by the way, if you guys stuck till the end, I appreciate you all. As always, hit that like button. Make sure to subscribe if you have not done so already. You guys are awesome. We're almost at 30,000 subscribers. It's been a long time coming, guys. Again, make sure to subscribe. I appreciate you guys. As always, we have good old Macys reporting earnings this week, and they're actually on the 1st of June as well in the morning. So Thursday in the morning, we have Macys, and this stock is down a lot from around $25 to now $14. It is down 43% pretty much throughout the course of this year, really since the beginning of February, and they're looking to do EPS of 45 cents on revenue of $5.04 billion, down 5.7% year over year, which we're seeing again a decline expected for JWN Nordstrom as well, which you guys probably know their competitors, Nordstrom and Macys. So retail, guys, not looking so pretty. And to be honest, I'm not looking to touch this thing unless we start to get a reversal, which, let's be real, we're not seeing that right now. And who knows, we might not get a reversal anytime soon. So those are 10 companies I'm looking at, guys. CrowdStrike, Salesforce, CHWY, JWM, Dollar General, AVGL, Five Below, Lululemon, ChargePoint, and Macys. Jam-packed earnings week and only 4 days of trading, so you better be ready. And you better get those free stocks from MooMoo, guys, up to 16 stocks, each up to $2,000, and you might as well get 12 more stocks from Webull with any amount deposited. All of those are linked down below, guys. It is free money, and of course, those links help out the channel. And feel free to check out my Patreon if you guys are interested in seeing me build out my Patreon portfolio, which I just bought more stock in, I think, on Thursday, or was it Friday? Either way, I think it was Friday, actually. Bought more stock in the Patreon portfolio. And if you want to be a part of the Discord chat, see my charts and ideas throughout the day, plus more. All of that's on Patreon, link down below. And with that being said, I'll catch you guys in the next video.